All right, guys, what's up? Welcome to another video. Thanks for tuning in to Stock Essentials. My name's Alex. We're going to be going over a little bit of AMC stock and options play. For people with smaller accounts, a lot of you really like the smaller account options play that we made before on AMC, and this is going to be another play to capitalize on AMC's consolidation. So right now, AMC sitting at a price point of $41 per share. And it's been pretty flat overall. Past month, it hasn't really moved. Um, and as we can see here, it's really holding its own as a stock at this price point. Even though the stock is up 1,000% on the year, AMC, as we can see, it's holding its ground. As we all know, AMC is mostly held by retail investors, about 80% free float. So AMC really has strong support, and a lot of people do believe in the stock, and just holding on until the short squeeze happens. But until then, there is opportunities to make money. Personally, I have been selling cash cure puts as well as covered calls just to make premium on both the call side as well as the put side by selling options. Now, for most people, they don't have that much capital. They don't have thousands of dollars to do these cash gear puts or covered calls, and so they're looking to grow their account on AMC with using a lot less capital. So we're going to be going over an options play just to capitalize on that. Head over to the options chain for AMC. I really like AMC to sell options. A lot of people think it's so risky, but there really is strong support behind the stock and just a lot of believers into AMC, which is why I like the stock so much. So we're going to be going over to we could do next week's expiration, November 26th. And we're going to be selling, first we're going to be doing a call credit spread. And then we're also going to be doing a put credit spread, effectively going to make an iron condor, which is pretty good because if we take a look at the chart for AMC, we're really in this consolidation period. And we do have a few more days of consolidation, a few more weeks. So I do think that we will see some huge volume, huge momentum occurring during probably late 2021, late December, or early 2022. As we can see here, it has this nice bull flag pennant formation. But right now, we're going to be capitalizing on the lower volume, and we're going to be selling some iron condors week over week until that happens. And there's good profit potential for people with smaller accounts. So what we're going to be doing is we're going to be selling. We can sell a 45 strike, 46. And we can also sell. Okay, so this is going to be a call credit spread. This is the first step into selling an iron condor. It's going to be a call credit spread as well as a put credit spread combined. So we have the call credit spread set up right here. Next, we're going to be going over to the put side, and we're going to be buying let's do the 34 strike and selling the 35. So as we can see here, we're going to be shorting an iron condor with the legs 45, 46 for the call side and 34, 35 for the put side. And make sure on Robinhood or whatever platform you're using, it says iron condor. You want to sell the 45, buy the 46, buy the 34, and sell the 35. We're going to be receiving a credit of $20, which is pretty good considering you only need to put up a collateral of $100. In fact, the collateral you're putting up is actually $80. It's going to be the collateral minus the credit that you're receiving. So it's going to be $80 of collateral you need to put up. And most people, they have $80. So this is going to be a great way to grow your small accounts. And we're really selling strikes at pretty safe strikes. As you can see here, pretty high chance of profit. I really like this play, and I might sell some iron condors on AMC. But let's take a look at what the profit percent return is going to be. So it's going to be $20 of credit divided by $80 of collateral, 25% return in 1 week. Because remember, we're selling a weekly iron condor. November 26th expires next Friday. So 25% return in 1 week is going to be pretty solid, and you have a high chance of winning on this trade. as long as AMC stays between our strike prices of $45 and $35. So as long as AMC stays between that range, we're going to be set, and we're going to make our full profit of $20, aka 25% return. So a lot of people were asking, how do you close out of this early? Basically, you just want to inverse what you did to open it. So as we can see here, the $45 call, we sold it to open, 46 bought to open, 34 bought to open, 35 sold to open. So you're going to be doing the inverse of this. We're going to be buying back the $45 call, selling the 46, buying the 34 put, and we're selling the 34 put and buying the 35 put. Basically just inversing what you did, and that's how you can exit out of the signing condor early before expiration, if you do so choose to do that. Otherwise, you just if AMC is well between our range and it looks like it's going to be a profitable trade, you can just hold it until expiration, November 26th, and just let it expire worthless, and you can receive your full credit of $20 per contract. People with bigger accounts, they can do that too. You can sell 10 of these, putting down collateral of $800, making a credit of $200. That's going to be pretty good profit potential there. And it's not really limited to smaller accounts. People with bigger accounts can do it. But of course, don't put in your entire portfolio. You don't want to risk too much, because in case the trade goes sideways, you will lose $800 on the trade. So only put in what you're willing to lose, because there is always a chance that it can go south. So that's about it for this video. Quick little video on a small account strategy, an iron condor, and AMC. If you're new here, please subscribe, hit the notification bell. Thanks for watching.